One. Good morning, good afternoon, good evening, wherever you are, whenever you are. Thank you for watching my videos. Here today we have Brian Beamish from The Rational Investor. He is my old professor that taught me everything I know about trading, and everything you hear from my mouth came from this man's mouth first. So, uh, Brian, how are you doing today?
Oh, great, Dev. Great to see you again. I think it was about 6 months or so since we last chatted with one of these videos. So I can't wait to hear what's been going on in Dav's world over the past 6 months. I think I saw you up in like Russia or something like that in trading competitions and stuff. I think you were up in the North Pole there. There was one video you were doing it. You were all shivering there, and there was like
Yes,
fog
I'm.
coming out your mouth and stuff. So you're like a total globetrotter these days. It's kind of fun with my old students. I kind of live vicariously through you. So I'm doing great. Thank you very much for asking. I'm just continuing doing my thing, helping people in the market as best as I can, and doing a few trades on my own for my own plans. And TRI itself, I would say we're in the middle of a big developer cycle, very much like crypto is. But I get the impression that we're helping people, and that was the whole reason why I did this project to begin with. So as long as I feel like we're helping people, we're steering them in a good direction, I'm in a good place. So thank you very much for asking. I appreciate it. And how's life been treating you, sir?
Well, I've been great. Yeah, I've been all over the place. I went to Davos. That's where I was freezing my balls off, right? and, uh, and then
Where is Davos? Is that like near the North Pole?
it's in Switzerland, right? It's
Mm.
a ski country. It's one of those big wig deals places. I didn't find it that much uh, fun. I mean, it was like basically a drunk fest for rich people, really. And so and so
Isn't that like, do they have like big like world economic forums or something like that
that's what
there?
it
So
was. That's what it was called.
you're
The world.
rubbing shoulders with the big kids now, eh?
Yeah, Janet Yellen was there actually. You could
Oh,
have could have
really?
met her, right? But I
And did you
didn't.
go, when they're yelling, you should be selling?
Exactly. So, anyways, what I'm sure our audience wants to know, like, what do you think about the crypto market? How it's been like a disaster, and they want to know when's this hellish bear market's going to end?
Well, uh, you're familiar with the Cabbage Coin story, right? Do you remember that guy, Cabbage Coin?
Cabbage coin. No, I'm not familiar with that one. Please
Maybe
enlighten us.
your viewers should do a Google search and Alex Stirk, a guy. Do you remember Alex? He used to be on the Coinigy shows with us.
Yes.
Alex ran a show called Block Talk on YouTube, and he did an interview with the guy running the Cabbage Coin story, and it was just an absolute train wreck. And unfortunately, I think that interview, like all your viewers, do yourself a favor and check into that. That was really a good anecdote of all the problems in crypto. And unfortunately, I think we have to go through the process of removing the cabbage coinness from this space before, in my opinion, we can really start moving forward in earnest.
Yeah.
So what I
It was a
noticed,
complete fraud, the cabbage coin.
well, it was a guy who was basically shilling a product, and it was basically 100% pre-mined, and he was just trying to line his own pockets. And the sad thing for Alex is, and I can't speak for him. I mean, maybe have an interview with Alex to talk to him about it. But he comes from the agricultural industry. His family is very intimately involved in, I think, the dairy industry in southern Ontario. So this gentleman had proposed a cryptocurrency to service the agricultural industry, and so Alex was really, really excited from that perspective. And then when he actually started to dig into the story and find out things like pre-mines and stuff like that, he realized that, gee whiz, this is probably a bit of a problem. And he tried to call the gentleman out on it. And through the interview, the gentleman just absolutely blew up. He wore a mask through the entire interview, which, yeah, exactly, right? Which, in itself is such an interesting commentary of this sort of pre-2017 crypto market. And I might make an argument that, if you were a reputable, honest businessman, why would you want to hide your identity? And, half of the problem with crypto, and I do understand the logic that a lot of people in this crypto space don't want their information, hacked by third parties and then disseminated and stuff, so they want to remain anonymous. I can understand that story. But from a promoter, from a developer, from a principal perspective, I don't think this whole sort of anonymous, who's actually behind the story, who's running the story, I don't think that's healthy for the space. I would make a serious argument that's one of the sort of main sort of selling features of Bitcoin is that there isn't that part of the story. And so I think that's one reason why Bitcoin has done as well as it has. Whereas, and this is sort of speaking to your original concept or, question, within the altcoin space, there's, we all remember the big connect kind of stories. That all has to be removed, and those people have to go away.
Well, I have a I think that's true, but you know what? That will always be here. Like for example, in one of the videos I did with Tone Vase is that yeah, some of these coins are outright scams, completely scams. But there are some coins that are just like somebody actually believes that they could produce a product, and really they end up not producing anything because there's no market for it, and
Right.
Tone Vase would call that a scam. Now, will people invest in those things? What's the difference between something that's not viable but somebody believes in it and a scam? It's a very fine line, right? And so
Absolutely, but if a guy that you're interviewing won't even show you his face, that's a bit of a warning sign.
yeah, you think?
Or if the guy comes on and says, "Buy my coin, you make $1 billion," right? That's a bit of a warning sign. And unfortunately, through and also too, I think we had like the confluence of major demographic forces all sort of come to a head there at the end of 2017. A lack of faith in the currency system, and then finally, crypto itself going through this sort of, okay, we are being officially accepted into sort of the big, the higher up sort of world. I think this transition, what's fascinating is when I first got to know you, crypto is very much not a part of the sort of, the financial institution world. And I think we're going through that transition period now. And it means, and interestingly enough, if you are a fundamentalist, and just as you said, if this project is a viable idea, the principles of full disclosure, and it's a venture. Unfortunately we do know, and Dav, you know this number, but on average, about how many ventures actually fail in capitalism?
About 90%.
A lot. And you could have some really, really good ideas too that sadly fail.
Mm-hmm. Exactly,
So
exactly. And so,
think
anyways, yeah, I think
just to finish this thought,
yeah,
this is the kind of market actually where now it actually pays to do your fundamental analysis. Now is the time where they're kind of throwing the baby out with the bathwater, and everything is being labeled a BitConnect. Everything's being labeled a Cabbage coin. And it's our job as analysts and as like insiders in this industry to try and pick through the stories and figure out which are the fundamentally sound ideas. And one very simple measure that I like to use, and I'll show you an example later on in the stock market in crypto, is I want to be long where the directors of the ideas are long. So if you're investing in a cryptocurrency, then my suggestion is try and figure out where the principals are invested. See if you can sneak in where they're long. That's often really difficult information to find out in crypto. So, that's a challenge unto itself. And actually, what I absolutely love about working with you, Dav, is you have sort of an inside track on what sort of fundamental analysis looks like. In fact, for our level one students, I often show them your fundamental screener that we put together while you were a student on the site, because I think that's an excellent reference manual just to sort of start what does fundamental value in this space look like. And if you go through that process, I mean, there's what, I don't know, 1,500 different cryptocurrencies out there. I don't know what the number is now. But if you go through that process of just weeding out and that universe, much is you probably whittle it down to maybe 50 names that actually are solid fundamental ideas. They have an idea where the insiders are long and relatively friendly market cap, and they're well distributed across multiple exchanges and stuff. And those are probably the names that you really want to concentrate in this kind of space. And I think I actually agree with you. I think even in the worst bear markets like Great Depression, coming out of just even in recent times, coming out of the dot-com bust, there was still stock market winners. So it's not like there won't be winners in this space. We have various people on the TRI community come in and just basically bring ideas to the community on a regular basis. But, there will be individual stories that do great. But the key is, in this kind of environment, we really need to know what the fundamental value of these assets are. I think half the reason why Bitcoin bottomed where it did was because it was starting to get into fundamental value levels. And then we got to have a story. I mean, there's got to be some sort of driver.
Yes.
All right, I'm done. Sorry about that.
That's okay. So, anyways, I think I want to roll back to that question and that I originally asked you was like, when do you think the end of the this bear market cycle is? And if you were to ask me, based on what you've taught me, is that when we're going into tax loss selling, and obviously they're still throwing the baby out with the bathwater, like as you said, and I believe somewhere in November, December timeframe is their time frame for you to start shopping for the altcoin stories that have sound fundamental values. Don't you agree?
Yeah, yeah, I think that makes sense. In old capitalist schools, you probably remember me saying this. We'd have just the simplest cliche, and I see that it works on crypto very well too. You want to buy when it snows, and you want to sell when it goes. So unfortunately, that doesn't work very well in your hemisphere.
No.
I think it's the exact opposite.
It's the exact opposite.
But I think that rule was primarily sort of designed for like the North American and Europe kind of investing environment. So really, the best way to approach this kind of environment, and frankly, what I'm doing right now, is now is the time period from about September right through till about, let's say, the middle of November. Now we want to build our shopping list. So, this is a really interesting idea. I would like to try and get invested in this idea. That's a really interesting idea. And just build your shopping list. Maybe you have like at the end of your research, you have like a list of maybe like 10, 20 names. And then into, like you said, into that tax loss selling window, into year end. If we understand that venture capital firms, they work on that calendar basis. So they often put new money to work in the market, like literally January 1st, boom, it's a brand new year for them. And we often see some really, really good looking bottoms come into the market through that sort of November, December, January period. It's we're doing this video right now. Hopefully a lot of your viewers watch this. I mean, do the work now. Figure out what names it is you want to be invested, and then just patiently wait for that window.
Yes. So with that said, I'd like to show the viewers some charts and want to do some analysis on three different assets and different assets classes. One, of course, is Bitcoin. The other is an altcoin that we once mentioned. And finally, mining stocks. So, do you have a chart ready for us to show us there?
Sure. Let's see. If I go like this, do you see my chart deck here?
Yes, we do. Yes, we do. Here, I'm just gonna move myself out of the way so that people can easily see your charts. There we go.
Okay. I suppose we'll just start with a look at good old Bitcoin.
Yep.
All right. Here is a daily view, and actually, I did quite a detailed analysis, sort of starting at the higher time frames on my weekly free video show that I do on YouTube. I don't know whether we include shills and links and that kind of stuff, but I do a weekend show for free, and it was almost 2 hours yesterday. Ay, ay, ay.
Yeah,
But
that's the broiler chicken show, right?
yeah,
On
the
your YouTube.
brother chicken.
Yeah, right over here.
Probably on my dad. Actually, I guess this is our website. This is our dashboard. Like I said, developer cycle. We're still sort of building all this out. But we do like hour-long videos every day on the site. So we did a video this morning, but the broiler chicken show is the video that we do for free for the YouTube audience on the weekends.
Why is it called the broiler chicken show?
Why not? I used to, I'm one of these old gnarly trader dudes, right? And I've traded everything under the sun. And, half of the reason why I liked making money in the altcoins during that bull was I was just open and receptive. I remember a lot of my CME buddies were like, "You're going to go trade crypto? What are you, crazy? What the fuck is that?" I swear, sorry.
It's okay.
But the point here is I used to trade with a bunch of guys that traded some pretty esoteric products on the CME. And one of the guys, John Bougeriel, used to trade butter futures. And they tried 3 times because everybody knows about pork bellies and feeder cattle and live hogs. And 3 times they tried to launch a broiler chickens futures contract, and they just couldn't get anybody interested in trading chickens. I don't know why. So it's always and it's a funny anecdote of capitalism, right? So it's always the broiler chicken show. It's a funny anecdote on trading in that you can trade anything in the world. But anyway, I've had a few people on, YouTube promoters and stuff say, "Why on earth do you call it the broiler chicken show?" And it's funny because it really screws up Google's sort of analytics. So the next video that comes up in their automatic stream is like a chicken farmer in the middle of Iowa kind of thing, right?
Yeah, exactly.
They just can't figure out what the hell I'm doing.
I know, because like I mean, your content's really good, but you know what? It looks like a ugly box, right? But beautiful chocolate inside, right? So people have to
Yeah.
actually open it up to see what's inside. So you might
That's
want
it.
to reconsider that name a bit.
All of your viewers saw the picture of me. That's probably a pretty good anecdote. Pretty ugly wrapping, but you actually open it up and there's some value inside. But
Exactly.
anyway, so feel free to. It's called the Crypto Trading Community Show here. Like I said, it's like an hour long or so. Yesterday's was 2 hours because I just went on and on and on. But the point here was that we picked apart the Bitcoin chart. I tried to explain, and these are the kind of things that I taught Dav while he was a student at TRI. Concepts of, we always want to start off any kind of conversation if I want to invest in something with this idea of trade location being absolutely the most important sort of initial aspect of making a trading decision. So, I'm a really big fan of 61.8 fibs and 78.6 fibs. That's what this tool is I just threw on here. I often like to draw a green box over that zone, and I call it the reload zone because remember, institutions, they don't buy up markets. They actually buy down markets. And what they do is they look at a trading range, and we can even go back to the last cycle. If we just do the exact same logic, again, institutions are not going to buy this up market. They're going to wait for the market to come back down to earth and just do naturally what it's supposed to do, that reload zone. And you can see how that basically painted the window where Bitcoin bottomed through that sort of 2014, 2015 cycle. Well, same logic here. There's nothing really new. So reload zones, 3 reasons for a trade. Number one reason should always be trade location. These reload zones and this idea of using 61.8 to 78.6, I just simply tell students, look, just try and force yourself to not buy if we're above reload zones. Just wait for the reload zone. We then like to look for signs of internal strength. And one tool that I like to use that I think I don't know whether you use the histogram or not, but MACD does a really good job of highlighting when an asset, maybe the price itself is a little bit stronger than what price itself is leading you to believe.
Correct.
And
yes.
this is this concept of momentum divergence, where the market went down, then it went up, then it went down, then it broke out, and it made a big fat W, even though price itself is continuing to work lower. This is, in essence, divergence. And it's just a sign that, hey, maybe the market's a little bit stronger than what price is leading you to believe. So we have trade location. We have signs of internal strength. And the final piece of the ingredient, I think it's a really good idea, new people to trading, try and hunt for this W concept. Down, up, down. Do not break that low, and then go back up through the middle part of the W. In essence, this W pattern is confirmed on that event right there, and it implies a new uptrend is developing. So we see through here, no W's, no W's, no W's. Oh, hello, there's a W. So hopefully you look on your screen, you see down, up, down, breakout. So we got a pretty big buy signal there on Bitcoin back. That's like March 8, I guess we'll call it the middle of March last fall. And it's interesting because we had like our last fireside chat right down in here. You remember that?
Exactly. Yeah. And we were talking about Grin, and I felt, and I guess we should have been more clear on positioning and how to be a person who doesn't like bet the farm on assets, right?
Well, that's all a conversation about risk management.
Exactly.
And actually, it's interesting. I have 2 rules of investing. So if you can just try and remember this, everybody who's watching this is really great. First off, we want some sort of algo approach that we know that we're going to be right. And I think you can shoot as high as 66%. I remember when I worked with a lot of floor traders, keep in mind these are day traders. They have to buy against lows, sell against highs. They think that number is fairly high, but if we take a position trading kind of approach to our investing, we wait for these 3 reasons, I think we can shoot up into that 60, 70% neighborhood. So that's rule number 1, and that's all about everything that I just talked about. Trade location, signs of divergence, this is what's called price structure, W's, go. And then really on the other side of that, what we really should try and do is try and figure out like targets where we're going to force ourselves to take profits. So, excuse me, I'm a really big fan of the 50% rule to take profits. So you can see if you bought this W and you took profits at the 50% level, you got handed a really, really nice trade. Rule number 2, and this is all about the second part of this conversation, which you just mentioned, is never risk more than 5% of your stake on any one single idea. And I even might make an argument that
should be lower.
Yeah, this is the absolute threshold,
Exactly.
especially for people that are running like positions, brokerage accounts. They're not looking at the screen every day. You're never allowed to break that. And, for like day traders and swing traders, the easiest way to make sure that you never break that is even just maybe cut that in half, like 2.5% of your portfolio. And that way, if let's say you're trading a leverage trade or something like that, and it goes horribly wrong, you get a horrible exit, you still never break that 5% rule. So, absolutely what you're saying. I mean, this in itself means that if you had like a stake that you were working with, that 1/20th of the stake is the maximum you could ever put in an idea. And if you're like building trading plans, like I said, I would actually recommend that you knock that number like in half, if you will. And then that way you never have to worry about breaking that 5% rule. So these two rules, if you can follow them, and it's actually difficult to lose money when you get into this scenario. The question ultimately, though, is there's a number of different ways to handle this rule number two. And I'm a little worried that a lot of people in the crypto space just sort of labeled themselves things like, I'm a little old lady, so I can go in and buy 5% of my portfolio, but by definition, that means I have to risk to zero. I don't know whether a lot of people in this crypto space really are little old ladies. The one tier up from the little old lady is Joe Sixpack. I think most people in this world are Joe Sixpacks. That's why the risk model is called Joe Sixpack, where maybe you put 5% of your portfolio into an idea, which of course we said is the absolute maximum. But if that falls by 50%, you have to walk away. So that means if you put 5% of your portfolio in an idea, it falls in half, and you take a 2.5% portfolio hit. I get the feeling that there's more people in the crypto space that don't like sitting on losing positions, that they're probably more like Joe Sixpack, which would be a typical retail client of mine when I was a broker, than they are really little old ladies. But the problem here is that when you get into a rip-roaring bull market and it's just all straight up, and you don't have to worry about markets falling by 50% of their value or more, that everybody it's easy just to be little old ladies and not have to worry about, stop loss orders and stuff like that. It's a tough lesson I think this community really had to learn.
So let's take a look at that Grin chart and let's see where I did some buying, and I want to talk about how I only put in like, what was it, like 0.5% near that the second, not the first turn point where it went.
Really? Like
Yeah, right
this
here. Yeah, right
right
around
there?
there. I was
How did
like,
that
yeah,
happen?
that looks like a nice level, and I went in and got one double off of that, right?
Yeah.
And so that's how you do, right? And I know I didn't do too much because I knew that, you know what, this thing it gets inflated a lot. There's going to be a lot of coins coming into the market, so we have to wait for this thing to actually like flatline like completely out, where or at least for another W to come in before I could actually even consider buying this asset. And when I do see a W, I'm only going to put another 0.5%.
Okay, well, 0.5%. You're definitely
Point
not
0.5.
breaking that
Yeah.
5% rule, so that's good.
Mm-hmm.
Look at this chart, and on balance, there was actually, here's probably a really good analogy of that sort of Joe Sixpack versus little old ladies. You can see how we did put in this very wide W here. You might have looked at that and said, well, gee whiz, if I have to buy here, that means I have to risk all the way down here, which is, that's 7. Just on that formation down to 5, I'm risking about 20-30% of my money. That's maybe a little bit much. But nonetheless, had you bought that, you can clearly see the market said, nope, we're not ready to bottom yet. And, that Joe Sixpack kind of thinking, I'm trading setups, W's. If the bottom of the W fails, well, you just got to walk away. And that's really hard for new people to do, is say, I was wrong. This market's not ready. I just got to get into capital preservation mode and walk away.
Yeah.
But, had you done that, you avoided this mess. I absolutely love, and this is a great one, this is sort of like a W within a W. So in this particular case, you had this very wide W,
Mm-hmm.
but you also had this really
Cute
cool
one
little
right there. Yeah, I know. That was nice.
inside the W. You love those. And
Mm-hmm.
then on top of that, you also had a really big volume spike on the breakout. So clearly the money was pouring into this name. We could also make the argument too, as you just said, um, I suppose just like I showed you off of that Bitcoin chart, you could have very easily said, okay, I'm going to buy this W, and what's a sort of realistic profit objective? There's that 50% rule, and notice there's how close your double level is to that 50% rule. So I think you could make the argument that I think there was a perfectly valid trade here. And I think you had your profit objectives hit. You want to keep it really simple. I just sell half on a double. Okay, fine. But I really do think it's a good idea to include things like 50% rules in your models. Now, I do, we have talked about little old lady investment strategies in the past and had you little old lady this, maybe 1%, 1%, maybe you're in buying another 1%. I don't know. The question ultimately at the end of the day is, do you believe in this story? I think we can make an argument like fundamentals and all that kind of idea. Do you have any idea where the insiders of this story are along?
No, not really. I think because you know what, this is a developer project, so it's all like developers and miners. So the developers they did not mine this at all. The community started mining. So really, the people at the very beginning, I knew that this was gonna just go nutsoid at the very beginning. As you can see, it did, and I did not want to be a part of that mess, as you can see. And I
Mm,
wish people had like everybody was asking me, "Oh, should I buy? Should I buy?" I'm like, "No, you crazy?" Up there, right up there. I knew that this thing because you know what they're mining it for the very beginning. There's going to be a
all
lot
right.
of coins coming in on the market, so no, you don't buy it at the top there. So you have to wait until everything settles down, the dust settles, and basically wait for people to hate this thing.
Yeah. One setup that your viewers might like to try and use, we call it the LJ on the site. I think when you were on the site, we called it the Ron Jeremy. I don't know whether you remember
Yes, I
that
do.
reference. But anyway, the point being that if you just draw a trend line off of recent peaks, ideally you want to see this trend line tag 3 times. So, once, twice, 3 times. A lot of new people to trading get sucked in on this breakout here, but the setup says that, okay, on the break of the trend line that's been tagged 3 times, we then start looking for a W. And you notice that just no W's came in here. And it's
Hmm.
just because there aren't any W's, my hunch is that she's just working off of this trend line. Might be easier for you to see this if we change this to like a log scale. So at least, there is the zero line right down there. This will at least give you sort of a reference window that this thing can play in. And as I said before, I think we're actually best served just waiting for a W on the other side of that line. I suppose you could see that sort of setup come in sort of through here.
Yeah, exactly.
Your original little buy that you did. 1, 2, 3. Trend line's broken. We do have this trend line floating out there. So this trend line being broken, okay, show me a W. There's the W. There's the trade right back up to this trend line. See how that works?
Yeah.
So long and short of it here, I think this was a valid setup, whether it be W's. I'm sure if we went and looked at momentum indicators and stuff, they were starting to point up nice trend line breaks. And like I said, I think we showed you earlier, there's nice volume that came in on this W. I think there was a realistic trade there. And then following that event, we just haven't seen any follow through. And unfortunately, we have broken to new lows here. So that means, if this thing does want to W out again, we probably have to start drawing like new trend lines. Boom, something along those lines. So 1, 2, 3. All right, show me some sort of W. Nope, nothing, nothing. So, I think probably at best this is now going to be pretty stiff resistance. And my hunch is, for whatever it's worth, and, calling markets is a mug's game, but, maybe we W and then we run up and run into that resistance there. And maybe we do 50% rules and you find that that's going to line up. Maybe that even lines up with where we are now, or maybe that means we got to come down a bit further here.
Exactly. Well,
so yeah, I can't really make the argument that there's any justifiable buy signal right here. But just be patient. And of course, had you taken, I think that was a really good setup. And had you taken it and you sold half on a double, technically you have a free position now, or risk-free position, we'll say.
yes.
And there's no sort of cost of ownership to this asset for you.
Exactly. So yeah, that's why I like the little lady strategy with the altcoins. Even though
if you want to combine little old lady kind of thinking with things like trendline breakouts and W's, and I think like we showed you, there's a bit of a divergence in through here. You can see, well, not really. Well, actually, it looks like the divergence was right there.
Yeah, that's where it was.
Willie was stupid through here. And like I said, volumes, I haven't said it, but volumes speak volumes. I think we got a pretty powerful volume breakout there. Like I said, I think there was a half decent trade there. And, your community, if they had trading plans set up, unfortunately, as we go through this sort of, the SEC is cracking down on alts and Trex is still delisting names. Poloniex is delisting names. Is Binance actually going to be open to U.S. customers? That's the sort of overriding theme of the altcoin market right now. And as I sort of prefaced all this, we got to get rid of those Cabbage coin people. So as long as we're still in that kind of environment, then this kind of price action doesn't surprise me. You got to take your winners when you get them, establish risk-free positions or just outright sell at a profit. That's entirely up to you and your trading plan. And this doesn't feel like it's just a buy the dip and forget about it kind of market. We're not in a friendly sort of altcoin market right now, in my opinion.
Yeah, that's true. And so the transitioning to some other markets that we could actually probably see some profits in if people are interested. The mining sector. I remember I did a video with Chris, and we saw that from the top of the market of Bitcoin, the miners have from the top of Bitcoin's price at 20,000 to now that the miners have tripled their revenue. Right, actually double their revenue, right? So I mean that's amazing, right? And I think that's just unbelievable, and I think that will translate into the stocks. And have you seen that translate into the stocks?
Well, there's one company. It's a little bit off tangent. There was another idea that I'll tell you about just shortly, but this Hut 8. Mining. I've been watching these guys. We watch them fairly closely on the site. There it is there. And you can see that these guys, through that was sort of that corresponding bottom in the Bitcoin price there back in, January, February, March kind of idea. Mm-hmm. This Hut 8 mining, you can see how it pivoted on a dime through that end of March window, and it's jumped right back up here. Gee whiz, this was like, an 80-cent stock, and then here we are at like $2-3 a share now. So there has been money to be made in the crypto-related stock market. You just have to be really careful in this space. One name that I participated in, and it's kind of a funny anecdote because this gentleman and I did a deal probably, maybe 15 years ago, maybe 17 years ago. in the silver market, which is interesting because silver, of course, is near and dear to your heart.
Exactly. It's one of my favorite altcoins. Original
so,
altcoins.
this gentleman runs. He had a shell that it rolled the stock back, shares for dad, options to directors, basically a clean slate. And through the 2017, sort of euphoric manic peak, he decided to put this company, this shell, to work within the crypto mining space. And so he runs a whole bunch of ant miners and all that kind of stuff. This is a kind of company that, because I know exactly where the insiders were long, they did a whole bunch of shares for debt and options to directors at 6.5 cents. I was more than happy to go in and just join him. And so you can see, as crypto was enjoying its big rally there, boom, this thing popped up top. So now I basically have a free ride on this guy's coattails for the rest of my life. And I love that because the stock that I did with him was at about 20 cents a share. That silver company back in the early 2000s, and they ran it up to $1 or $2 by the end of the run. So here's a situation where I know the guy's in the business. I've done deals with him before, so of course I have a pretty good idea of the quality of the directors. The various different fundamental screens that we run on TRI's site highlight sort of value within the venture cap space. So I identified where the insiders were long and a half decent story, and I just basically hopped on their coattails. And, the crypto rally here has basically generated a free position for me on this stock going forward. So,
Nice.
this
That.
is the approach that I would prefer to take. And, for whatever it's worth, I'm a really big fan of this idea that through what I like to call fear cycles, or demographically, the majority of the population in our society is moving into retirement, moving out of the workforce, moving out of the economy. Through those types of environments, there's usually a preference for hard commodities and hard assets. And of course, Bitcoin fit that perfectly. Sort of a lack of faith in banking system because the bankers have to dilute the currency to try and keep the Ponzi game going. I believe that we've made that transition, though. We're not in that kind of market anymore. I do believe that, the transition is usually painful, and there's often recessions through the transition. So I do believe there needs to be a recession to come up here and sort of clean out the space and hit the reset button. But the cycle that we're heading into now is all about growth.
Yeah.
And I would really like to identify companies that can use this really powerful concept called the blockchain to try and drive profits and drive growth. And so I'm actually spending a lot of my time through this sort of transition period really hunting for value within the stock market that are crypto-related names. Kind of like what I told you with that HUD-8, this little guy. We've got a list of probably about a dozen or so little crypto-related stocks that we're focusing on TRI very closely.
Well, why don't you come back to the
By all
face,
means,
and so that everybody can see you, right? Because we can like wrap this up a little bit.
sure. Am I rambling here? I'm sorry if
No,
I'm.
that's all right. That's all right. Just switch back to your face mode so that everybody can
Oh,
see your
yeah. Okay.
beautiful,
So we're coming
beautiful
up.
mug.
All right. So that means I have to kill the
So stop
screen share.
sharing. Yeah, there
Right,
we
there
go.
we are.
There we go.
Got my
There we go.
handsome blue shirt on. As you can see, I just moved into these new digs, so I'm still unpacking all the bags and stuff.
Oops.
So, but anyway.
I got the wrong page up. There we go. Yeah. So, anyways, yes. Yeah. So, you tell us about your school and what you do there and how you educate your students at TRI.
Okay. I guess I had a unfortunately, and I may look really young, but actually I'm pretty old. but I had a life-altering event happen to me about, well, just a little over 8 years ago. I lost my wife. Um, and it's weird. It's like since that event, um, I had a complete change in the way that I look at this world. And how, and if I get emotional about this, I'm sorry, but you can tell I'm speaking from the heart. Um, but I had a real sort of decision as to what I was going to do with the rest of my time on this planet. Because keep in mind, we don't really get that long, and unfortunately, I had to stare death right in the face, and it's not fun. But the point is, I looked at my own life, and I had spent prior to that a good, 20 plus years uh, just infatuated with the market because I absolutely love the market. And once you sort of catch the bug, I caught the bug when I was in my teens, and you just can't lose it. Once you catch that bug, it's lights out. So I've done just about every single job you could possibly do in the stock market, and my goal was I wanted to do every job. So nobody could come to me and blow smoke up my butt saying, trying to promote something and say, oh, you don't know. I mean, yes, I do know. I've done all the jobs. So you can't really pull one over on good old Brian. Um, but after that event happened, I had a real sort of, epiphany with what it is I'm going to do with my life. And the end result, the sort of conclusion of that exploration was that I wanted to make a positive difference in this world. I mean, that's really why I do all of this stuff. I was very comfortable working at a prop trading firm. I was funded. I was in very good relationship with all of the people on the site, management. I was just working away, doing my thing. And then this cryptocurrency story came along. And, crazy stories aside, I feel like I got a message that, hey, this is your opportunity to help people. This is your opportunity to make a difference in this world. And I made reference to Alex Sturck earlier. He often said to me, the one thing that you've done for this space, Brian, is just brought he called it financial literacy to this space. We're a lot of new people to this space. They don't realize that what a lot of this price discovery process is about is just nothing more than human emotion. This the fear versus greed. And unfortunately, a lot of people come to this space with either big dollar signs in their eyes, greed, 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 I'm going to buy my Lambo, that kind of stuff. Or, the market starts to move against them and they're just absolutely riddled with anxiety because they don't know what to do and they're underwater and, oh my God, am I going to lose everything kind of idea. And so I think the big sort of value that I bring to this space is just opening people's eyes to, number one, we're not really reinventing the wheel here. Professional trading and professional money management, this profession's been around for, in North America and modern sort of society, it's been around for a good 150 years. It's not really in the sort of 1%'s best interest, though, for society to be educated about this stuff. Quite often, the 1% actually takes advantage of the fact of this sort of emotional reaction from the public, and the public does actually the exact wrong thing at the wrong time. So what I do and sort of my contribution to this world is I just sort of help people open up this new world of how do professionals actually act in the marketplace. And it starts with things like, if you're going to do anything in life, it's probably a pretty good idea to have a plan and to actually articulate what that plan actually is. As I just very briefly demonstrated, I think it's a good idea if you're ever going to act in the marketplace that you clearly articulate in some sort of algorithmic fashion what's going to actually get you to take that wallet off your hip pocket and actually spend money. And keep in mind, this is your hard-earned money. This isn't somebody else's money. This is your money. So it's in your best interest to really articulate what is it going to take to actually get me to spend my money. And ideally, what we want to do is we want to try and replicate that behavior over and over and over and over and over again. It's really important for us, believe it or not, just to simply track what we do. And ironically enough, half of the mistakes that a lot of people make is they just don't do what they say they were going to do. I heard Jack Schweiger the other day. He did a really cool interview where he said, um, ironically enough, and he does Market Wizards books and stuff like that. But he just simply found that the reason why most people fail at this game is not because they have bad intentions. It's just that they don't do what they actually say they were going to do. And they end up listening to some guy on CNBC. Oh, he says this is a good buy. Well, then it must be. So I go and buy it. But you need to and it happened. I mean, he was saying that you couldn't walk into a surgery room and watch like an hour-long lecture on how to do brain surgery and go in and do brain surgery. You couldn't do that. It'd be impossible.
No.
But for some reason, people think that you can sit down for an hour or two, listen to a guy talk, and then all of a sudden, boom, now you're a professional trader.
Not going to happen.
I mean, most of my students that I work with, and you could probably attest to this, Dav, is it takes at least a good year or two of really studying and really working and really, logging everything that you've done, journaling how your emotions are affecting your behavior, tracking your mistakes and making a commitment to correct those mistakes. Like today, for example, I had a short trade on Bitcoin, and the market ran up to the level that my model says that I have to exit. And so I just went and exited the position at scratch. That's what my model said I had to do. No emotions, no thinking about it. That's what my plan said to do, so I had to do it. I can almost guarantee you, I bet there's people on TRI site that said, yep, I'm in this trade with you. I'm taking this setup with you, Brian. But they didn't act when they were supposed to act, which is sad. But that's half of this learning that you have to go through as a professional is when you say you're going to act, you have to act.
Exactly. And that's why you have stop losses, and they force you to act, right? You want
right.
you want methods to force you to act. And so, if you're interested in being part of Brian's educational program, the link in the description below, please. Everybody, please click in the link if you're interested in that class because it's excellent material. I enjoyed the class. I was very well served. I mean, he helped me bring my portfolio into the more than 7-figure, 8-figure mark. And so I am very happy with what I got. I think you should charge people by the percentage that they make.
I always said, for alumni, people who actually make it through the education program, and everybody here should know that this is a long journey, going from absolutely knowing nothing to being able to act as a professional in the marketplace day to day. It's going to take a good year or two of seriously hard work. And I can tell this whole audience, Dav showed up. He did the work. In fact, I was so impressed with the work that Dav did that we actually, what I do is I sort of set the table. I say, here's some trade location tools. Here's some momentum indicator tools. Here's some price structure tools. Remember our 3 reasons for a trade. Now I want you to actually figure out what speaks to you individually. And what I was so proud of Dav is that he took the tools, he did the research, and he said, well, Brian, I noticed that when this happens, and that happens, and that happens, I get a pretty reliable setup in that sort of 60-70% area. And I'm like, you did it. Way to go. And on the site, we call it the Davo setup. I mean, I love to make my students famous. I talked earlier, LJ setups. Well, that was a student. I showed you the trend line break setup. I love to make my students famous. Absolutely love it. So everybody on the site knows who Dav is. And I talk in the public lots about Dav, and that's a testament to you. You put the time and effort in to really figure out what speaks to Dav, and then you owned it. And that's exactly what you have to do as a trader.
Yeah, exactly. And it's hard work, and I hope everybody understands that trading is not about gambling and throwing the dice and trying to win. No, you're not. You're never going to win that way. I mean, there might be the 1 in 1 million% that you get it right, but overall you're gonna get it right one time and then continue gambling the same way and find out that that's not the way that you end up losing everything you've got, right? So
And
yeah.
there's an old saying that says, and this is sort of sadly what I think happened at the end of that crypto run, was it's always dangerous to have a little bit of success right to begin with. And if you come in some sort of crazy rip roaring bull market and it's just like, yeah, this is like shooting fish in a barrel. And then the market state changes, you get handed, oh my goodness, I see how hard this actually is. Um, and I might argue that we're in the part of the economic cycle where the next few years it's going to be tough sledding. This is not the part of the economic cycle that it's just shooting fish in a barrel. That's usually the middle years of decades. So,
Yes, I think that crypto is gonna move into the same cycle as regular stocks, where you're gonna see 7, 14 year cycles, and after probably the next bull run in Bitcoin, I think then we're going to be slowing down the cycles quite a bit. In my personal opinion, I don't know for sure, but that's what I believe.
well, what I do like, and this is the key to this whole crypto story, is if you can somehow find value. What is value? And the great part about Bitcoin, you can't speak about all cryptocurrencies this way, but the great part about Bitcoin is this whole concept of what is the cost of production. If you can just force yourself that when we're at or below the cost of production, that's where I see value. And then focus in, kind of like what we showed you on the Bitcoin chart earlier. For those three reasons, it's not an accident. And really, that's, my site, I bill myself as the rational investor. Well, that's really what rational analysis is you want to have the fundamentals say that, yes, you are buying value. And at the same time, the technicals say, yes, you are buying a good setup with three unrelated reasons to consider taking a trade. So it doesn't surprise me that Bitcoin acted the way that it did, because fundamentally it was in that sort of value window, and technically it was set up to rally, and boom, there you go, your rally. And what I'm
Wow.
worried about now is prices now not at value, and I'm hearing a lot of people coming in, especially a couple months ago. I heard a lot of people saying, I'm going to quit my job and I'm going to be a full-time Bitcoin trader. And it was just like, oh God, here we go again. You know?
Yeah, I hear you. I hear you. It takes a lot of work, and people just don't understand that. Nothing comes to in life easily. You have to work at it. And if you're willing to work at it, you're willing to learn. The link is in the description below. Please check it out. It doesn't hurt to even give the 7 day free trial. They have a 7 day free trial on their website at therationalinvestor.com, and you can try out the school and go through the different tools that they have through there so that you can
Well,
see.
the 7 day trial is relatively limited, right? We're not
Okay,
going to really open up the school for that,
I
but
see. But you
we
guys
do
do open up the.
do hour-long videos every day. We call it the daily brief, Monday to Friday.
Okay.
And we do have demonstration portfolios. You can see, actually, Julian's running a small portfolio, and I'm running a Bitcoin trading plan off of OK Coin right now for sort of site peeps. We do have just a world of free altcoins from the last big bull market. So they're just sitting on the books. And frankly speaking, I'm not in really no hurry to do anything with them. Um, but we do have a very robust lounge, which I think is actually a really big selling feature of our site, is that our community is very active. And we're really big believers in what we call PMA, positive mental attitude. So, in essence, if you do the 7 day trial, hopefully you get just sort of a taste of what we do on a daily basis, and you can go through our database and watch countless hours of daily briefs. But also to get sort of a feel for the tone of the site, and how we really we're like one theme that we have on the site is 1 + 1 = 3, where if we do work together, we work in a sort of a community to make a positive difference in this world. The learning just comes a lot faster and a lot easier. And remember, this is a process that you're all trying to learn. What we
Yes.
really want to do is we want to teach you a profession and a skill that you'll have for the rest of your life, just like Dav. The good
Yes.
part for
Yeah.
Dav is he's set, right? If he just follows the basic principles that he learned through the program, it doesn't really matter. It might be cryptocurrencies, it might be silver. The principles are exactly the same.
Yeah.
And it's just, once you learn that, then it's just a question of rinse and repeat.
Yeah, I want to. I think the biggest value add to your school is the community spirit that I've noticed. I talked about it a little bit on the Tone Vase show. He asked me like about. I had a whole bunch of different analytical tools, like for example, color candles and the Three Musketeers and all that
Yeah,
was developed by students at your school, and they shared
yeah.
that with the community. So you get that kind of level of support that you get to learn from other traders that have done also well, and also are developers that are building tools to help you to trade even better. So I mean, you get so much more than just the education there. So please check it
In fact,
out.
on our we have a screener page that just spits up technical setups all day long, and half of the screeners are built by site members. And really all they want to do is they just want to try and give back because they feel like they've been given such a gift.
Exactly,
So
exactly.
we have trade ideas on a daily basis being spit up by the system, and that's that whole 1 + 1 = 3 kind of idea.
Definitely,
Yeah.
definitely. Well, Brian, it's been a great show. It's been about an hour right now, so let's wrap it up for the day. I hope we can do this again. I'd like to come on your daily brief show one time, right, and give my
Well, you're on
thoughts.
there all the time. But yeah, if you want a spot
Yeah.
and just tell us what you're seeing in the market, yeah, the door is always open for you.
Well,
You know that.
thank you. Appreciate
In
that.
fact, actually, Kavarkinator, I don't know whether you know Kevin, but he's actually officially driving the daily bus, the daily brief bus right now. He's the director of the show. All you got to do is just reach out to him and just say, "Hey, I want to come on." And he'll pencil you in a slot, and as always, you have a free reign.
All right. Well, thank you very much. Well, I hope you enjoyed the show, and see you all later.